Hi everyone, hope you're all doing well, and today I'm going to go through all the stocks that I bought this week. I'll go through this list and show you what stocks I did buy. I was going to bring this video out on Friday, but the pre-market started to move a little bit red and I was like, okay, I might actually go buy some more things today. And I did. I bought this one here, which you might be able to guess. I left the letters up for you guys to try and have a guess which stocks they were that I did buy. Some stocks I averaged into and some stocks that are new stocks. And because of the dip, I was looking at some stocks and they were really diving on the share price, which is always the best time to go buy on a dip. And yeah, there was 3 companies that really did stand out to me to be a really good buying opportunity at the time. So yeah, I'll go through everything through here. So if you could smash the like button. If you do want to know when I'm buying and selling companies when they do happen, join my Patreon. The link is in the description. On there's also a Discord. We do portfolio reviews. We do private live streams on there. It's a pretty good service in my opinion, and try not to be biased. If you want to start buying some shares, there's a link to a free trade account. You join through that link as well. You also get a free share, which is pretty good. But yeah, we'll get started. So yeah, I was kind of looking this week, and the main thing is, the whole stock market, especially the tech stocks, were pulling back quite a bit. And the thing I was really looking for is big dips in companies that, because what normally happens when an index pulls back, so if you take the Nasdaq, for example, the Nasdaq pulled back, I think it was something like 7% this week. When the Nasdaq pulls back 7%, you'll start seeing that sometimes some stocks actually start pulling back like 20%. And I was trying to look for them companies, like which companies have pulled back quite a lot at the moment, because 20% off your share price is, to lose 20% of your value is quite a big chunk really. So yeah, I was kind of looking for some really big dips that you're like looking, okay, that's quite a bit of a sell-off. In some companies that I was like, okay, this company doesn't normally dip that much, so I thought that's a good opportunity. And I'm trying to think about really good solid companies, like companies that I'm looking at and thinking, I can only see the share price in the next 2 to 5 years being higher than where it is right now. So yeah, that's what I was kind of thinking of. I wasn't kind of looking at more of my smaller companies, so like my kind of like 1 billion valuations to 10 billion valuations, like, your Gang, companies like that. Those are the ones that I wasn't really focusing on as much this week. I was trying to look for some really big companies that don't normally have that many pullbacks, and those are the dips that I was trying to capitalize on. But hey, if the price is right, I will go buy it. Cash power wise, obviously you guys know I was always very wary of a correction. The last couple of months with buying stocks, and that meant me building up quite a bit of a cash pile. My cash pile was 30% going into the start of this week just gone. The cash pile has gone down to somewhere between 20 to 25%. Don't know exactly, but I have gone through the cash a little bit. But at the same time, you can see that I'm still keeping a cash pile on the side that, if next week we have another red week, if we enter a bear market and the stock market is down for the next 12 months, I've still got a lot of cash on the side to still go buy companies. So yeah, I did use my cash pile up a little bit this week. At the same time, I'm still keeping a nice chunk there that if anything was to happen over the next 12 months, I'm still okay from that sort of position. And I did sell 2 stocks. So I sold 2 stocks because I bought 3 new companies, and as I always say, like, I want to make sure that I can give my full attention to them companies, and if I take on 3 new companies, my time is taking up more and more on my stocks, and I can't keep up to date on them. I can't read their earnings conference calls, which is something to be really careful of if you are buying companies, that you can still give your attention to all of the companies that you do have. So when we're taking on 3 companies, I thought it's wise to probably drop 2 of them. The 2 that I did drop as well were smaller positions, so I was like, as the portfolio goes up and up and up, I kind of wanted, companies that I don't have that much money in, I don't really want to keep that much. And these 2 that I sold, which was MJ Gleason, which is a house builder, which I still prefer Taylor Wimpey and Barrett that I own. So that made sense to get rid of that one. And I'm still very well diversified in there. And also Wizz Air, which I bought, and yeah, I'm a Jet2 fan, so it was a nice, them 2 stocks gave me a nice little gain, increased the cash pile slightly, and also means that I had better opportunities to go buy, and also just to make sure my time isn't spread between too many stocks. I thought that was a good decision to make. So yeah, that helped the cash pile go up a little bit for buying in these companies, because the UK stocks had a pretty decent week really as well, and both of them being UK stocks. But yeah, so what I'll do is I'll go through these stocks that I averaged in, and I'll cover them for like maybe a minute, 2 minutes. I won't give a full in-depth video on like why I really like them. There's videos for them on the channel somewhere, so have a look for them. But yeah, we'll go through the ones that I averaged in first, and then I'll go on to the new stocks that I added to my portfolio. So got the first 3 here. So this was the only UK stock that I bought this week, which was S4 Capital. I bought this company very heavy this week, and I think my average was like £5 or something, and it's coming down near to the £4 range now. It's dropping quite a bit. The stock had a bit of a pullback. I'm not 100% sure. I think it's just why the pullback happened. I think it's just rotation from a company that's been, you would say that's pretty safe with all the CV stuff that's going on in the world, that people have now gone, you know what, let's take a risk at some of these companies that are being affected by the CV and do a bit of a recovery play on them. And I think that was just a rotation in the sector. I don't know how much more it can go down, but the more it goes down, I'll just keep buying that one. And one thing that I saw, and I kind of covered this on a few videos, like sometimes people get nervous, like when a company's £5 and it drops to £4, like, oh my, why is it dropping? Like, why is it? I don't want it to drop. And it's like, I can't get that mentality. Like, if you love a company and it's dropping, you should be so happy about that opportunity to go buy. Like, I was talking to this on my Patreon group, and I was saying the other day, like, let's just take S4 Capital. Like, I think in 2 to 3 years, S4 Capital will be a £10 stock, and it was £5. So that's 100% return. But I was like, but if the stock in the next 3 months drops to £4, and it's still, the fundamentals are all the same, and it's going to go to £10, you're going to make 150%. So you're going to make even more money. So why are you not happy that in the short term you are getting a cheaper average? Like, you're going to make more money on it. You should be celebrating. You should be like, oh, I'm going to make more money in the next few years because of it dropping now. Like, short term drops mean more money in the long term, and that's something that I'm definitely going to keep pressing at the moment, because I think the strong thing is like pushing the right mentality to have out there. Now we're entering a market which isn't as generous. That's one thing that you've got to keep focused on. But yeah, S4 Capital at the moment, like, I'm just going to keep buying it because I love it. I think it's got so much potential. I think it will be a multi-billion-dollar company. And yeah, it's just great. I really do like this one. I don't think I've got a full video on that one, but I kind of did it. I mentioned it on the free stocks to buy series. And on the free stocks to buy series, I gave it a good kind of 8 minutes talk about that company, but I probably will at some point dedicate a full video to that one. Next up, DraftKings. So DraftKings, I was buying a lot more of this week. It was dipping down a little bit more. I was kind of like, I'm going to hold off for earnings now and see what happens with earnings. But because it kept dropping and dropping, it was getting like to mid 50 range. And I was like, okay, I'm just going to keep buying this one. And they did report earnings in the end on Friday. I'll probably do a full video on it. Hopefully there's the demand there. I probably will talk about Beyond Meat's earnings as well. But the earnings that DraftKings brought out on Friday were 10 out of 10 earnings. They were incredible earnings. I think like the revenue beat was like 150% year over year. I think the guidance they brought forward, like I can't remember exactly, I think it was like a 20% upgrade on guidance. It was amazing beat, 10 out of 10 beat. And I'm not gonna lie, I'm looking at DraftKings right now, and I'm thinking generally this could come my biggest position in the stock market portfolio. It's not there yet. I think it's probably somewhere around 5th, 6th biggest position. But I generally looking at this one, I'm thinking it could become my biggest position, because I'm looking at this one and it reminds me of something like a Square in the early days, like Square when it was a 20 billion company. I was like, this company is going to be huge. It's going to be a 100 billion plus company. And I'm looking at DraftKings and I'm just seeing exactly the same thing right now. And I'm thinking, like, for me, DraftKings, I see this going up 5x in the next few years. I think this is one of the best opportunities in the stock market, in my opinion, on the US side of it. Number 3, Amazon. So Amazon's been stagnant for a while, and as well as that, I think it dropped a little bit because of the market dropping down. There's also the management change that's going on there. But Amazon, for me, I'm looking at that company, and the more they beat revenue, the more they beat earnings, and it's just stagnating. The valuation is just dropping more and more. And the valuation for an Amazon, for a company that's growing at like 30% revenue, with the profit growth that it has, is amazing. And I'm looking and thinking, this actually isn't a bad valuation. You look at Amazon and I'm looking 2 to 5 years down the line, like, Amazon, is the revenue going to be more than where it is right now? Yeah. Is the profit going to be more than where it is right now? Yeah. And that's just on the main company. We're not thinking about all the other companies that have like web service and everything like that. And I'm looking, is Amazon's share price in the next 2 to 5 years going to be higher than where it is now or lower than where it is right now? And I was like, it's 100% going to be higher than where it is right now. Sure, maybe the days where Amazon goes up 100% every year are gone. It's never going to do something like that. But I'm looking at Amazon and thinking, it is one of the best companies out there in the world. And I was like, if the stock is stagnating, why wouldn't I not buy that dip? Like, it's just I think it's such a good opportunity. And sure, it's never going to be a company which is going to be my biggest position in the stock market portfolio, but I'm looking and thinking, this company is going to do well over the next few years, and it's a big blue chip. It won't be a company which drops, 40% in one day. I think it's just a nice little builder to carry on in the portfolio, and I thought, why would I not own Amazon shares? It reminds me very much of like a Microsoft. So I bought Microsoft, I think in 2017, I'm going to say. I'm up over 100% on them shares. And it's just a nice steady earning in my portfolio that I just look on and it just carries on going. It pays me a nice dividend, and sometimes, they're not the most exciting companies to own in the world, but they just do great things for your portfolio. Like Microsoft, it hardly moves downwards. It just keeps uptrending. And you get I look at Microsoft now, and, I've held that company for a few years, and I look at it over 100% up, and I'm thinking, it's just such a nice stock to own that just gradually goes up in the background, and you can just leave it and not deal with it. It causes a headache. And I'm thinking, like, can I get another one in here? And I think like Amazon is exactly that. And actually one of these companies that I bought, I thought was exactly the same. So yeah, I thought that was a good opportunity to go buy. So number 4 is Shopify. I think this is like a bit of a baby Amazon. I don't think they'll ever be the size of what an Amazon is, but I really like what this company is doing. It gives the companies a different perspective of like going on Amazon, trying to compete with 10,000 listings that are exactly the same. You get here a site which you can create for your company where you can manage the inventory, you can create a brand, you get the analytics, you get the advertising side of it. They're even now doing a fulfillment center, so they even handle the stock for you. You can put it through Instagram channels, Facebook channels, TikTok channels now. And yeah, this company's mainly been for like English speaking countries, and over the last few years they've definitely been working on building up their European presence through France. And I think it was a year ago that actually, I think it might have been 2 years ago, that Shopify actually added in different languages. Like previously to that, the only language you could get on Shopify was English. So yeah, that obviously helps with its European growth side of it. And yeah, I think the company grew 90% in the last quarter. And I think the forecast on this company is like to grow like somewhere between like the 20 and 30%. And I'm like, there's no way this company going to drop from 90% revenue growth down to 20 or 30% revenue growth. Like this company for me is a really decent competitor to Amazon, and it's one that I wanted to build a few weeks back, but the stock market just kept going up and up and up. But now it's had a bit of a pullback, and I can carry on building that position. I think this one and this one are about exactly the same, but these are Shopify and Draftkings are actually two companies that I would like to keep building up over the next kind of few months and weeks if possible. I think they've got a lot of potential in the long term. Tattoo Chef. So I did buy some shares in Tattoo Chef. I increased my position slightly. I was averaging up still slightly, but I looked at Tattoo Chef and I was like, they just brought earnings out, which were pretty decent. I think they've got so much potential with the amount of SKUs that they're bringing out, the amount of partnerships they have. I wouldn't be I think at some point what we're going to see is more and more. I think like they've got Walmart at the moment, Costco, Sam's Club, and I think that they've just introduced themselves to some other stores as well. I think at some point we'll hear like, Kroger's are now going to sell products, which will help huge. I think Target are going to expand the deal with Tattoo Chef, and yeah, I just see this one doing phenomenal over the next 5 years. This is, once again, I think like DraftKings, I see going up like 5x over the next 5 years. Tattoo Chef is very much the same. I see this growing huge over the next few years. And number 6, which was the stock that I bought on Friday, which was Planet 13. So this was one that I bought, the stock went up a lot, and I was like, it was that kind of feeling of, hey, look, this is how crazy this market is. You just buy something and it just keeps going up. But finally, this one had a little bit of a pullback. I did end up averaging up slightly on this one, but I was like, you know what, I'm not going to. It was something like 10% I was averaging up, and I was like, I'm not going to argue over 10%. I was like, when I look at Planet 13, the company has so much potential over the next few years to just open up a few more stores. Like, it's only working off like one store at the moment. And I think in the next 5 years, this company will have like 5 stores. And if it has 5 stores, I think the revenue will 5x from there. If it can do the same revenue which it's doing at the moment at the store it has, that will lead the valuation to go up. And if that leads it to go up, I think that's going to be a multi-billion company in the next few years. So yeah, very happy to kind of. I think I'm about fully built on that position now. I could still buy a little bit more, don't get me wrong, but I got to where my target was, which is good. And these are my 3 new companies that I bought this week. So we'll start off with number 1, which is Genog, Golden Nugget. So I've talked about this company, I think it was about 2 months ago, and this company made me really nervous because I was looking at Golden Nugget and I was like, right, so they've split Golden Nugget online off its other parent company so that they could basically raise cash, put it on the balance sheet of Golden Nugget. They then took Golden Nugget public so they could raise cash from the SPAC stock and then use the cash from the SPAC stock to pay off some of the debt. And it was kind of used to really save the rest of the Golden Nugget empire. So I was like, I don't like that. Clearly management have only split it off to use it as a bit of a cash raiser to save the rest of the business. And I didn't like that. I was like, management are not really prioritizing what's kind of going on. But I looked at what the company was doing, and you guys know that I'm a big fan of Gang. I'm a big fan of DraftKings. I love the space, and these guys are in the same space. The company itself is growing. I think it was like 60% revenue year over year, which is absolutely amazing. They currently operate only in one state. And I was like, they're moving to 2 states. Well, they have started operating in 2 states. And then they're probably going to, in the next few months, go to 3 states. And I was like, if they can keep 10% market share, which they currently do have, and then move that into a couple of other states, this company is then going to go from being 100 million revenue to over 300 million revenue. And I was like, the company is only valued at like 800 million right now. And I was like, it doesn't really make sense. Like in the next 2 years, I see this going up, to a 2 billion valuation, which is 100% upside from where it is right now. And this company was like at $20+. It like the valuation on this has dropped 50% in like the last few weeks really. And I was like, we've had a big massive drop. The company, even though I don't like the management for what they've done to the company, they're still doing a good job with the growth side of it. And I was like, this has come to the point where I'm like, it's worth a little pump. So I did take a little bit of a put on it. Didn't put too much money in it, but I think that it just came to the point where I was like, the valuation side of it, to what the revenue growth is, to what the potential is with this company. I know the company in and out from DraftKings and Gang. I was like, it's never going to be a company that I hold as much as DraftKings. It's never a company that I'm going to hold as long as Gang. But when I look at the potential side of it, I know the growth that this company can have. I just thought, okay, let's see what happens here. I won't hold it as long as them guys, but I think it's undervalued, and that's the thing. I think it's an undervalued company, so I did buy some shares in it. Not a huge position. It's one of my smallest positions, but I thought, okay, the company's lost half its value in a couple of weeks. I was like, okay, let's go for it. Number 2, Square. So a payment company, a massive payment growth company. Square is one that I've always been very hesitant about the valuation side of it. Even right now, buying this company, I was like, it's still a heavy valuation. But I was like, is it realistically going to drop to when Square is putting in the growth that it is doing, how much is this company going to drop? And I looked at the company, and I think it was Thursday. I looked at the valuation on Thursday, and I was like, it's lost 20% of its valuation in 4 days. And I was like, that's a lot. It still might not be the valuation that I want it to be, but how much more is it going to lose? Like, to lose 20% of your valuation so quickly, I was like, that's a decent sign. And I just like, let's just put some in. It's not a big position, but I thought, you know what? Square, next few years, is Square going to be higher than what it is right now? 100%. Like this company with its payment sector, how it's doing its Squarespace, it's going to be big. The share price is going to be higher than where it is right now. And I was like, it's on a 20% dip. How much more is it going to go down? I thought, let's get some exposure in here and go buy it. And that's what I did. I think it's a company that will be higher in 5 years. So I bought it. And like I say, I think 20% dip off its valuation is a lot. Number 3, very much like Square, I still struggle to get my head around the valuation of Tesla. I think like at one point it was like a $800-900 billion valuation. I think it's dropped down to like a $600 billion valuation now. So it is getting a little bit better. I still look at Tesla and I'm like, okay, it's still got 3 years of growth already priced in. And I was like, it's still a lot. But same as Square, I was looking, it's on a 20% drop. It's lost 20% of its value in a week. And I was like, that's a lot to drop. And I thought, is this company realistically going to come to an okay valuation? Probably not. You know, it's the leader of the electric vehicles. The technology is far ahead of whatever else is in its sector. Its developments in the other areas as well is really good. And I just got to the point where I was like, okay, you know, it's not gonna. I still can't justify putting a lot of money in here, But I was looking at it and I was like, to get the leader in this space at a 20% drop, I thought was an opportunity just to take up and, you know, see where it goes, because these two, there's no doubt, they're in the prime years right now. These two are going to, in the next 5 years, are really going to perform very well. And I thought it's good just to have some exposure in these two companies and leave it for 5 years and see where they go. But yeah, there's just little opportunities that I took on a big dip. That are great companies in the space, and I thought, you know, 5 years time, there's no doubt these are going to be, I'm going to make money on these. So yeah, pretty happy with them too, and I think that was a little bit of shock buying into them too as well. So yeah, hopefully you enjoyed it. This is the list of all the companies I bought, and hopefully you found it useful, and hopefully you bought some good opportunities out there as well. You know, let me know in the comment section what you bought as well. I always like hearing about what you bought as well. So yeah, let me know. Smash like button if you are watching this video all the way to the end. If you are new, subscribe as well. That'd be absolutely amazing. And I'll see you next video.